We're rolling into the mid-afternoon on Wall Street, and it's time for another quick reset. I'm Grant Mercer. This is Storm Stock Solutions, and we're here to keep some clarity through the chaos as we head toward the close. What's new? This hour is a fresh angle on the AI story. Not from chip makers or cloud giants, but from the workplace itself. According to a new piece on MarketWatch, some companies are pushing employees to embrace AI tools with a hardline message. Use it or risk your job. The article argues that threatening to fire people is actually one of the worst ways to get meaningful adoption. For markets, this touches something important. AI has been the growth engine for tech valuations, but whether that plays out depends on productivity gains actually materializing in offices, factories, and call centers. If workers resist because they feel threatened, that could slow the real-world efficiency boost that current stock prices are already baking in. Traders watching the AI trade are increasingly focused, not just on the technology, but on how successfully companies integrate it into day-to-day workflows without sparking backlash or morale problems. The other big theme that continues to simmer in the background is the proposed Trump accounts for kids. As MarketWatch reports, Ray Dalio is the latest billionaire to commit funds to the program, which aims to create investment accounts for American children starting in 2026. No direct market impact today, but professionals are gaming out what a large government-linked pool of long-term capital might mean over time for broad index products, asset managers, and financial firms that could end up administering those accounts. It's part policy story, part future flow story. Meanwhile, on the human side of finance, the personal money headlines dominating the feed are telling you a lot about sentiment out there. One widely read MarketWatch column features a 76-year-old still working, just $100,000 saved, and a real fear of becoming homeless once the paycheck stops. Another looks at a couple with millions in stocks, heavily concentrated in Apple, wrestling with tax exposure, and whether they're over-reliant on a single name. Add to that stories about whether to buy annuities in your 50s, and whether boomers should start gifting money to adult kids while they're still alive, and you see the same thread. People across the wealth spectrum are anxious about longevity, security, and how to turn market gains into durable financial stability. For traders, those are more than lifestyle pieces. They speak to flows. Are households more likely to rotate from pure equity exposure into income products like annuities and bonds? Are older investors going to de-risk concentrated positions in mega-cap tech? Those behavior shifts can quietly reshape demand for different asset classes over time. In the sleeper category, a few sector stories remain worth having on your radar as we move into the final couple of hours. MarketWatch is highlighting that Eli Lilly and Novo Nordisk have both filed next-generation obesity drugs with the FDA, aiming to build on or leapfrog current blockbusters like Wegovy and Zepbound. That's important for the broader healthcare trade. If new drugs show better efficacy, fewer side effects, or different dosing, it can change how investors value these pharma leaders and how they think about ripple effects in food, beverage, and medical device names. Over in mobility and tech, there's still active debate around Uber. Bernstein analysts, cited by MarketWatch, argue the stock is trading near historically cheap levels partly because investors might be overestimating the existential threat from robotaxis. The key question there into the close is whether autonomy disrupts Uber or becomes a tool Uber licenses and plugs into its platform. Any shift in that narrative can move not just Uber, but sentiment around autonomous vehicle players more broadly. Into the next hour, I'll be watching three things: how that AI workplace pushback story filters into the broader AI narrative, whether we see any fresh reaction around the Trump accounts idea and Dalio's backing, and how healthcare and mobility name trade as investors digest the obesity drug filings and the robotaxi debate. All of that will set the stage for our closing bell wrap, where we'll connect these headlines to where the major indices actually finish the day. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,